Hey everybody, we will be going over HIMS and HERS Health. Today they are a health company that specializes in uh, weight loss products, supplementary health products, men's care, women's care, things like that. So mostly online from what I could tell. But they're seeing a lot of growth recently, a lot of stock movement. So let's get into it. Make sure to subscribe. All right, so HIMS. So starting right out, cost of capital is right at 11%, which is pretty solid. Target price is at 25 at the moment, which is good. Long-term growth rate is a crazy 76%. Love to see that. Oops, sorry. Um, let's go into their income statement. Now, from what I understand, their sales growth has been very solid recently, and we could see that here. This is actually the quarters. Let's go out to the years. You could see it way better here, going from 271 to over 1,200 within the past 3 years. That is fantastic. Operating income, we're seeing them become positive this year in 2024, which is awesome. Let's see how recently. So it looks like as of the beginning of this year, they are increasingly positive. So that is fantastic for them. I'm sure there'll be a lot more accelerated growth rate in the more recent months. Um, Net income, same thing. They've actually been net positive for a little bit longer since it looks like December of last year. They had a net profit, which is awesome. And that again is increasingly growing. EPS, same story. Yeah, same story there. So doesn't look like a little bit of dilution actually. Total shares going from, let's see here, 206 a few years ago, 217 now. So again, something like that where over the past year they've gone from 214 to 217. That is not really the most insane thing in the world. So I'm going to give that the 0.5 because that's really not too bad if they just need a little bit extra cash for reinvesting, something like that. For the balance sheet, it looks like their cash situation, wow, their debt situation is fantastic, actually. So cash is sitting at what I am, yeah, 250 million. Long-term, short-term combined is only a little over 10 million. That is fantastic. Assets are increasing at least over the past few quarters. And yeah, assets are doing perfectly fine. Short-term debt is great. Long-term debt is great. I'm sure retained earnings are just recently positive, possibly. Looks like not yet, but it is getting closer to the zero mark, which is nice to see. It's kind of always been right around 350-ish million, but right now it's looking like it's dipping down. So that is definitely something to pay attention to for the future. For their cash flows, let's see, operating is positive and increasingly positive. Love to see it. Investing cash flow is negative. Looks like it's more recently from acquisitions and purchasing investments, which is always nice. Capital expenditures are decreasing, which is good. But again, purchase of investments, looks like they sold some acquisitions, which isn't anything to worry about. So, or it looks like they bought some acquisitions, I should say. Sorry, but looks like they've been selling off some of their investments more recently in the past year. But that is no big deal. We like to see it. Financing activities, it looks like they're repurchasing some stock, which is great. We should be seeing that. So we didn't see it on the income statement, but that's mostly because 2024 isn't done yet for the total shares. But free cash flow is good, increasingly positive. I like to see it. Fantastic. Let's go into the use of cash. We should be seeing that repurchase of stock. and hopefully some debt. Now, they don't have a lot of debt. So, again, interest expense doesn't even show up, which is fantastic. I mean, they just don't have any significant amount of debt. Um, I don't even know what to put for that because it's zeros across the board. So I'll just give them the credit. It looks like they have been increasingly repurchasing shares over the past 4 quarters now. We're starting to see some, which is awesome. Not crazy amounts, 30 million, 19 million, 28. Nothing too crazy, but it is nice to see it starting. I'm sure they're going to continue that into the future, which will only fuel more and more growth, which is uh, stock growth, I should say. But let's get into the ratios. I'm sure the SG&A is pretty solid over the past few years. So SG&A is actually fairly high. 83, 116, 84%. That is a little high. Let's go into the quarters. Hopefully we see some decreasing, which again we do. That is very nice. 84 at the end of 23 to 67 now. That's not too bad. Um, I think I'm going to give the half point there because that is still fairly high number. Now they are doing a ton of things like advertising, really fueling that sales growth, so it is understandable. Net margin again just recently became positive. ROA, ROE, same thing, and long-term debt to total equity is decreasing. And again, it is like nothing. 2% is nothing. That is fantastic. So HIMS and HERS, one of the highest scores we have seen at 94%, 21 out of 23. Love to see it. 94%. Let's lock that in. Perfect. So you can see that is right below NVIDIA for the financial situation. So now let's go a little bit deeper. We'll look at some reports here. So something to see is revenue increased versus the estimate. It was 401 versus 382, which is awesome. EBITDA again, 50 to 55 million versus 40 estimate. One important thing is some management comments here. So they have weight loss offerings, contributions from our G1 solutions increased 40% year over year. That's awesome. Improving brand awareness, that is a really big thing. I've actually heard a few people discuss like in person, like HIMS products, whatever. But so it is kind of becoming more of like a household brand name. So that's definitely good. Looking into it a little bit more, let me zoom in for you. So online revenue is really what surpassed expectations. So 392 million versus 370. Wholesale fell a little bit short, but it's still right in the range. Um, Again, average order value increased 48% year over year, which is a massive increase. Ending subscriptions 44% year over year. Again, net orders 20% year over year. This is huge, extremely significant growth. So now, saying that, let's look at the stock chart. So you could see where their earnings report came out. They opened on earnings day at $20. Now, right now they're at 21.64. So considering they're at that same price, the stock could be really interesting right now as an investment opportunity. Again, entertainment purposes only. I'm not telling you to buy anything. Do your own research, but looking very interesting at the exact same price as that fantastic earnings report. It went all the way up to over $30 and drop back down. And you could kind of see the support line I've drawn here. They're seeing higher lows. They just hit a low as of Friday and brought it right back up today. I believe they're up 12% they're up over 12% today, which is insane. But again, just the long-term chart, you could see they have been experiencing a ton of growth over the past few years here. So 22 end of 22, 23, Stock price has gone from right around $6 to now 21. That is fantastic, especially over the past few months. Let's do the long term here. I mean, you could see the growth from where they went public. It was $9, more than doubled now, and that is in 4 years. So it seems like they have struggled for a little while, especially with just 21, 22, probably COVID supply chain issues. But again, over the past year, they have just really ramped up the growth, seeing a lot of positive stock price improvements. I would not be surprised if within a few weeks it is back up near 30. This is a possible investment for me. I don't know if it'll be included in the next portfolio update. I might pick up a few shares. Um, we'll have to see, but that is it today for HIMS. Hope you enjoyed the video. Make sure to subscribe. Hope you learned something. Have a great day, and I will see you in the next one.